Hi, welcome to the Market Alert for Wednesday, the 13th of December 2023. So all greed, no fear ahead of Fed meeting later today. VIX hits 4-year low as crude carnage continues, and also metals as well. Treasuries and stock shake off CPI losses ahead of FOMC meeting, which we have tonight. Yesterday's CPI numbers came out month on month by an increase of 0.1%, which apparently is classed as a wobble. And what it also does, of course, it means that Powell won't be won't be reducing rates later tonight, but may be reconsidering. But I very much doubt that. I would say that rates have peaked at this time. CPI year on year 3.2 came out 3.1, so it doesn't really matter. So it'll be interesting. So today the news is going to be, like I say, that's the one that's going to be important today. The FOMC rates to stay the same for this market. We've got GDP for the UK, core PPI and PPI at 1 as well. But it's 7 p.m. tonight. That's going to be the big one there. And speaking of the VIX, we've got a chart here now. So we managed to find something not ideal per se, but it will do the job. So let's just go to the 5-year chart, and you can see that we're at 5-year lows for the VIX. I don't think I can actually. Oh, I can. Yeah, there we go. So yeah, you can see there that across to there we're at 5-year lows, and when we get to 5-year lows, we get carnage and multi-year lows, and down in these sorts of lows as well. You can see if we just pull it back, you can see how low we are, apart from down at 2007 when we had the mortgage crisis there. But again, all the way down we see where we've had corrections following this, and the markets are too quiet and devoid of volatility. There is going to be a shakeout coming very, very soon. If not before Christmas, it will be certainly after, that's for sure. So if the lower this goes, the same as the implied volatility that we used to have, the lower it goes, the bigger the shakeout correction will be in the underlying markets, S&P, Dow, etc. Okay, let's move on and have a look at the markets. They didn't do a fat lot in response to the news, so let's just have a whistle-stop tour through and see what we can glean for today. And starting off with the Dow, again, we continue to move higher. The best thing to do is to look at the monthly chart. We're about 300 points off the all-time high, which will be done, no doubt, today. And then once we go through this, then the landscape will change. It always does once you've made a new all-time high. It doesn't just keep going. Dow daily, as we say, market up yesterday, market moving up. And then we had the release of the CPI, and then we're off to the all-time high. You can't make this crap up, but that's the way it works. That's the way it works. And it'll be the same today as well. It'll use this news to move the market back to those all-time highs. In the German DAX, continuing to move higher as well. Like I say, when you've got these sort of parabolic moves, eventually they have to give way to a major correction. 30-minute chart was starting to show weakness yesterday because the high of yesterday was in the pre-market. I couldn't get back to it. It did during the release of the CPI numbers, and once it had broken, that was it. It was down, and so far it's down as well. But it'll take it out today. Don't worry about that. It'll soon be back. In the S&P 500, like I say, we've broken out of that sideways move we've been looking at, market moving higher, and again we're heading towards those all-time highs in the S&P as well. All you need is an FOMC meeting for Powell to say that you can see in the press conference after that he can predict that rates are going to start coming down in 2024, and we'll be straight through this as the Dow will, as the through the 36,000, well, nearly 37,000 area. So no surprise there. That's how it works. Daily chart for the FT100. You can see the market there breaking out as well, but not moving like the other markets. In fact, in the monthly chart, we're nowhere near like the others. 30-minute chart for yesterday. You can see there we were up to begin with, and then we came back down, and also heading towards the low overnight at the moment as well. US dollar down yesterday but managing to recover, which is interesting because they've hammered the metals once more on the CPI news. So let's have a look at those. As I said before, we're going down to $20. We're currently $22.60, somewhere in that range, but we're going down and down and down. They're not going to let this market go up. There are 8 commercial banks who are net short at the moment, and all they do is keep adding to the short, piling the pressure on. All you need tonight is for Powell to say that he's not going to be raising rates, and that will be it. It'll soon send it to the downside even further. Or if he says he's going to continue to raise rates, they will do exactly the same when he releases that information during the press conference. So yeah, that's where we are in the 30 minutes, already below the low of yesterday. We're going to get more and more of this as we go through the festive season. It's an ideal time to crush the prices of the metals. We're now below $2,000, as I said we would be. They wouldn't let it move, stay above $2,000 because the central banks are accumulating gold, ready for when the banking crisis turns up, which, according to some sources, and also a wonderful video by I think Lena Petrova, her name is, talking about $314 billion worth of debt at the moment starting to surface in the banks. So this is why they're accumulating gold, because they know the system is under immense pressure, as with interest payments being so what they are because of having to increase rates to combat inflation. So gold being hammered, it's going to be hammered down probably to, let's have a look at a monthly chart. Yeah, back down to the sort of $1,800 levels. Another fair bit of money to come off that, but no way are they going to let that go. Not at this time. Maybe sometime in the year, but every time it gets above $2,000, as I've said, in the week the alert, they hammer it back down. Just that we've got a new all-time high in gold at the moment at 21.36. No all-time high in silver. It's at 50-year, less than 50% of its 2011 and 1979 high. It's never made a new all-time high since 2011. So no, actually, it's 1979. Amazing, absolutely amazing. The only commodity on planet Earth that it's not actually higher than it was in 1979. So again, the manipulation is blatant. Okay, let's have a look at the gold-silver ratio. And as I said, we're going back up through this resistance to the left, and we're going all the way past 90. And if I switch this to a monthly chart, if I can find one, let's just have a look. There you go, you can see where the highs are, where we're heading. We're going to take this one out here. Whether we get to the 130, who knows? But they're going to keep moving the price of silver down. The gold will hold itself because that's the way that works. But silver, I wouldn't be surprised to see go above 100 level once more during the festive season. Okay, let's have a look at the basic trades for yesterday and also the overnight market for the 2-minute DAX. The only trade we had was yesterday afternoon. The market moving to the upside and didn't do a lot once we got to the BRN, which we'll just fast forward through. And then we got to the BRN, moved the stop to break even, and then we got the scalp who was struggling to get through. So eventually I just took the profits off the table. And that was it. That's all we had during yesterday. The bars are just so tiny. I mean, we're talking 3 or 4 points in some of these bars over 2 minutes. So it'll be interesting to see how the market's going to be shaken up by tonight's FOMC meeting minutes. And what the other thing that's happening, you're getting lovely moves. If I just show you this, let me just bring up the chart. And as you can see here in the 2-minute chart overnight, we're getting some nice moves, nice trending markets. And then we get nothing. Once the market opens, it just trades sideways when all the big boys come to the market. We've got a bit of a shakeout going on there. But like yesterday, you just don't get any sort of activity. The market just drifts and nobody wants to sell, nobody wants to buy. And there's not a lot we can do about that. But at the moment, there's a bit of a pullback going on. But certainly after this sort of move, we are due for a serious correction in this market. So again, it all depends on what is said tonight and how the market reacts during tomorrow. Okay, that will do it for this one. Let's see what Powell has to say later on today and how the market reacts to it. So that's it for this one. As ever, thanks for watching. See you in the next one.